Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of over $122,000. That's made up of my stake portfolio that's sitting at around $65,277, and then my Vanguard portfolio, which is sitting at around $57,000. I also have $1,200 in my Vanguard cash account that I'm going to be investing today. Overall, it's been a great time for recent investors as my stock portfolio is up around 2% since this last video if we look at my stake returns. Overall, you can see my total stake portfolio is up 32% now, or around nearly $16,000. Many of my investments have stayed the same over the past few years, but they've just compounded and done quite well long term. If we have a look at some of my recent ones that have performed quite well, you can look at Amazon, which is now trading at $226 a share. And if we have a look at the last month alone, it's up 6.6%. So it's been a great month for Amazon investors, and this was a stock that I was heavily investing in when it did dip. I have around $7,500 in total equity, USD, and I'm up around 15%. If we have a look at some of my other holdings as well, if we just look at VOO, which is my biggest position in this portfolio, which tracks the S&P 500, you can see in the last month alone, it's up nearly 5% and is sitting at around $576 a share. This is a broad market tracking ETF that I plan to keep around 50% of my stake portfolio in, and it's been quite good for me. As you can see, I'm getting closer and closer to $20,000 in total equity, and I'm up around 37%. Obviously, I have been dollar cost averaging into this for years, so that does affect my total returns in terms of percentage, but I think long term, it's a great investment for me to hold. And I remember back in the days when it was around here, you could see $400 a share, trading all the way down into the 300s, and it's really been on a great rally since then. So this just shows investors, just having your money invested in the market long term, you should hopefully do well for yourself. Again, this isn't financial advice, but this is just me sharing my story of what's happened with me. Even if we look at my Vanguard portfolio, you can see the real growth in this. Even if we look at my two key positions, VLC, which is now trading at 86.73, and I have 126 shares on this. I sold around $6,000 of my VLC position and put it into VGS, which trimmed my total portfolio I'm holding for it to around $10,000. And you can see that's all the way nearly up to $11,000 again. And the stock has recently rebounded. This position invests in the biggest companies in Australia. And you can see in the last year, it's up around 11.64%, which is a good total year return, especially with its strong dividend payments. I'm not a dividend investor, but it does pay a very high yield dividend if that is something you are interested in. All my dividends, I invest right back into my portfolio. And if we have a look at the last year, like I mentioned, it's been a quite good holding. So you could see at one point it was trading at around 81. It has had some downturns. So if you were buying the dip, you've done quite well for yourself. This is around Liberation Day. And then as you can see recently, it has really shot up. Again, I've mentioned this before on this channel, but this is a position I might sell in the future if I do use it towards to go for an investment property or go towards other things. But at the time being, it pays me a very strong dividend and it has performed quite well. My other position is VGS. VGS is Vanguard's International Shares ETF, and this is by far the biggest position I hold in both my portfolios, sitting at just under $45,000. And after I invest my money in, it will be over that amount. And it's trading at around $144 a share. This tracks the biggest companies globally, and I have 311 shares on this position, and it's something I've grown consistently over time. If we have a look at some of the information, its returns in the last year are 18.63%, which is great. It also distributes quarterly dividends, which are quite strong as well, and it has a pretty low management fee. So it's something I'm happy with investing in my Vanguard portfolio. Like it says here, it tracks the total returns of the world excluding Australia, which is why I have my other position with net dividends reinvested in the Australian dollar index before taking into account fees, expenses, and taxes. So around 1,300 companies and 23 different countries, but it does have a heavy weighting to the US, which I'm quite a fan on because I do believe that's where the best growth will be. And if we have a look at the last year's returns, this looks even better than what VLC does. You can see it was trading at around 124, all the way up into the 142s, 143s, and then there was that correction around Liberation Day. I was heavily investing during this dip, and now it's made its way slowly back up again. So again, this is a company, or this is an ETF that I really believe in. I think it gives me strong diversification, and it's something that I plan on holding long term. If we look back at my stake portfolio, some of my positions that maybe haven't done as well recently is if you look at Costco, this is a position that's done historically really well for me. I did sell out around half my position in it, as I was up around 70% or 80% at the time, so it was doing quite well for me, so I did take some gains in that and then move that money. But if we have a look at the last year, it's up around 13%, which isn't bad, but it's not as good as some of my other positions. And if we have a look at the last 6 months, it's traded pretty flat. And then the last month is down 3%. So Costco is a staple in my portfolio. It's one of my original holdings, if any of you have seen it in my old videos. But yeah, it's historically done really, really well for me. Like I said, I'm up 65% in total, or around 500 USD, with an average buy price of $574 a share. The stock was trading at over $1,000 a share, and it does trade historically at a very high PE ratio, as you can see here, 54 PE ratio. So people do think it's quite inflated. It does pay a pretty low dividend yield for the type of company it is, but it does pay special dividends. If any of you have been an investor in Costco for some years, you'll know when the company has surplus cash, it pays out a special dividend, which is quite good. I remember it might have been a few years ago now, I got one of them, or a year ago. And a YouTuber I also watch who does a similar thing on here, Joseph Carlson, also invested in Costco at the time and got that special dividend. So it is something that the company does do. But yeah, it has been trading at a pretty high price. That's one of the reasons why I haven't been personally investing in it. I remember there's some videos on my channel where I was saying, oh, if it gets back under into the 500s, I'll buy again. And it just never did. It just went on this massive run, which again was great for me as an investor, but I wasn't putting any more money in because I was finding it a little bit hard to justify the price. I do think they have one of the best business models in the world, them and Microsoft. They have such strong reoccurring revenues. When you look at their memberships, every single quarter it increases. If you go to your local Costco, especially here in Australia, it's always full of people. I just think it's a great business. I personally myself have a Costco membership, and I think it's a great place for potentially to invest your money. Again, I'm probably not buying into it right now, but if it does dip again, it is something that I will look at investing my money into. Another position that probably hasn't done as well as some of the others for me is Apple. So again, Apple is a company that I sold out of. I sold a big position of it. I only own around 1,100 USD in total equity. This position used to be around 4,000 or so. So I did take a lot of gains in it. I'm only up around 30% at the moment. And if we have a look at the last year for Apple, it's down 5.8%. So yeah, like I said, historically this has been a good one for me. This is the first stock I ever bought was Apple stock. My very first ever stock, so it has got a bit of sentiment to it, but I did sell out a chunk of it. So again, you have to put your investment goals and that ahead of the sentiment. But yeah, even in the last 6 months, it's down 5.5%. With the tariff worries and the innovation worries, people do stress around Apple going forward. Is this just a GDP growth company? Are they going to innovate anymore? They kind of seem to be on the back foot when it comes to things like AI. But yeah, we'll see what happens with it. They do trade at a 32.6 PE ratio, which again is higher than some of the other big tech competitors like Google as an example, which I do hold in my portfolio, which we'll cover next. And there's better growth opportunities, people believe, in a stock like Google, where they're willing to take that extra risk, even though there is that risk around search being disrupted. Going forward, I think Apple's still going to be a great company. I think if I was to close my eyes and come back and look at this company in 5-10 years, I think it would have still performed and done good returns. I think they would have grown. But do I think it will grow faster than other companies? I'm not sure. But that's up to you to decide and kind of look into. Historically, it has done quite well. I know a lot of people were quite worried when Warren Buffett was selling shares. Apple became such a big part of his investment portfolio in Berkshire Hathaway, just due to growth as well. But yeah, it's interesting to see what happens with this stock. Again, it's such a small part of my portfolio now, but I still have a bit of exposure to it. Next, if we look at Google, so Google is what I was just mentioning before. It's really been an up and down bumpy ride. I own around 6,274 USD in total equity, or around 34 shares, and I'm up around 12%. So if we have a look at the last year, it's up around 4%. But again, that all depends on where you were buying. So if you were buying here at the top around the $200 mark, you obviously have had a rough year, you're in the red. But if you were someone who was buying around these dips, as you can see, there's been multiple dips, such as with the Liberation Day dip, I tried to buy in around 160. You can see my average share price is $164. So I am in the green. I am in the green around 12.5%. But yeah, it has been a bumpy ride. There's lots of fears around search dominance getting disrupted, and that is a big driver for Google in terms of profit. But their cloud business is growing. Again, they've got other great businesses like Waymo, which aren't discussed as much. And again, they do trade at a much lower P ratio. When you look, Apple was around 32.6, I believe it was. Google's trading at around 20.3. I believe that's lower than the overall S&P 500. So don't quote me on it, but it is a great company, and I think it is being heavily discounted potentially. Obviously, there are reasons why the company is being discounted with the fears going forward. But even if you look in the last 5 years, there's been so many good opportunities to buy Google. This is a company that I did invest in some years ago and I sold. I was quite sad that I did sell at that time. If I had held those shares, I would have done quite well. And I don't plan on making the same mistake. Again, it's sitting at around $6,200 in equity, so around 10,000 AUD. And I still believe in the company long term. I think it's like Apple. If I was to close this portfolio for 5-10 years, I think Google will still be here generating cash and still be a great company. Going through the rest of my portfolio, things have been pretty steady. Microsoft has been like Amazon. It's done quite well for me, 6% in the last month. This was a stock that I was holding. If you have a look at the last year, it was trading very, very flat and pretty bad. And then it's just had this great run recently, which has been good for me. This was actually my biggest individual stock back in the day. Again, like I said with Costco, I think it has the best business model out of all the companies that I hold. It's recurring revenues, it's sticky. Everyone uses their products. And I think they're pretty much on the forefront of AI with their partnership with OpenAI and different things like that. So I think Microsoft will be a great company that I can hold long into the future. As you can see, I own around just under $7,000 in equity, and I'm up around 62%, which is really, really strong, or 2,600. This was one of the original companies I invested in, like Apple, and it's done very, very well for me in the last few years, especially 23. You can see 2023 and 24. It really carried a lot of my portfolio returns in that 2023, end of 2022 kind of period, 24. That really, really did boost my returns. Obviously, it had a very stable, just trading to the right year in end of 24, start of 25. But again, I think it's a great company. It's trading at a bit high of a P ratio right now, nearly 40. So it's not something I'm investing in right at the moment, but I still think long term it will do well for me. That is kind of how the portfolios are sitting. So I did invest around $600 last week. Again, I'm not investing as much as I historically have been, as I am saving money for other stuff. I've got a trip coming up to New York. I've got some other things coming up as well. I'm studying quite hard at the moment for the CFA. So I'm not really focused too much on investing at the moment, especially while prices are quite high. I was heavily investing at the start of the year, and I do want to save up for things like an investment property and just boosting my overall savings. So whilst I have been investing, it hasn't been as aggressive. But that just goes to show you that just with there's always that saying that when you hit your first $100,000, the rest of it comes a lot easier. Again, I'm sitting at I'm sitting at over $122,000, so $22,000 in gains basically this year, and I haven't invested as much, it feels like, or worked as hard as I have in other years. And it just goes to show you, once that portfolio gets bigger, it becomes less around your deposits, I've found, and more about the market movements. So it's been quite good for me. Again, a goal of mine was to hit around $135,000 in this portfolio by the end of the year. Again, if I didn't do these holidays or save or things like that, then obviously it would be quite easy. But again, you have to balance things. You can't just put everything into your savings. You have to live a little bit as well. So whilst I am investing, I still think I can hit that mark by the end of the year. Fingers crossed. But like you can see, my Vanguard portfolio is getting closer and closer to 60,000, which will be quite nice. My stake portfolio is at $65,000 now, so it's really, really strong. Again, a goal of mine was to get 50,000 on both these portfolios, and I've surpassed that easily now. So it's been quite good for me. I plan to continue to do these videos and dollar cost average in. Again, you can see my dividends are getting bigger, so all that's going right back into my portfolio. And whilst we talk about dividends, I'll show you the Excel spreadsheet. So this kind of just breaks it down a little bit more, showing kind of how the portfolios are weighted and showing this over time. Again, these only get updated at the end of the month, so these figures are outdated. They're quite a bit behind, but you can just see historically the trend of going up and to the right, and it's been quite good for me. Dollar cost averaging over time. It just shows you the power of compound interest as well. And this is really helping me kind of get a bit more flexibility in my life. I don't have as much pressure as what I previously had financially. I can sell these securities if I need to and kind of have the money there. Again, you don't want to be in a position where you have to sell. So this is money I can put away. I have enough money sitting aside for if I need money, but it takes a lot of pressure off your shoulders. Like, for example, I'm potentially looking at wanting to do like an MBA course overseas, which will be quite expensive. But the more I can kind of grow my portfolios, the more it makes it more attainable that I do have that money there if I want to. Again, same with dividends. This just gives me an extra source of cash flow. A goal of mine was to hit $2,000 in dividends this year, and I'm definitely on track to hit it. Once I update these for my recent dividends, I'll be doing quite strong. And then with my final dividend in the quarter, I should be able to break $2,000. But again, you can see my dividends over time, and this can almost become a second source of income for a lot of people if you are a dividend investor. All my dividends go right back into my portfolio because that will help over time. I think more than me taking the money out. I don't need the money now. I've got a pretty stable, strong income. So it's quite good for me at the moment. But yeah, this is kind of showing how things are. Again, I'm getting closer and closer to hitting that $125,000 mark. So that next quarter, hopefully in the upcoming months, I'll be able to do that for you guys, and I'll keep tracking the videos on here.